Hello students, today we will discuss Corporate Accounting 1. At the very outset, I welcome you all for the BCom third semester after a long gap of the 6 months. As you know, we are all faced a pandemic of COVID-19, a tough situation for economy of the world and nation also. Now we are facing another one challenge. With this pandemic, we have to move ahead. We have to take part of the education of the 2021. So today here I am discussing with you regarding the corporate accounting first of the BCom third semester, Vijayanagara Sri Krishna Devaraya University. Welcome you all once again. Welcome. In this corporate accounting, this is one of the accounting system meant for corporate world. The companies which are registered under the Companies Act 1956 and according to the Companies Act 1956, 2011 of Amendment Act and 2013 Amendment. Every company which are registered in India according to the Companies Act 1956, they have to follow the prescribed format of this act. In this first session, we deal about the introductions, preparation of the final accounts and some numerical exercises. Once again, welcome you all, my dear friends. What is the objective to learn the corporate accounting? Why we should learn the corporate accounting? What are the reasons to learn the corporate accounting? My dear friends, today the globalization economy made whole world a single market. We have to learn the new accounting formats and new accounting systems to become an accountant, a perfect accountant in the company. This is the first one. To make you the people to solve the questions and exercises of the Companies Act accounting problems. As you know, I think some of my friends maybe saw some advertisement regarding the financial statements of the company which are registered under the 1956 Act. So every company have to publish their financial audited statements in the renowned newspapers. I think some of you maybe know the accounting formats. Before 2011 and 2013, we have to follow the T-shape of the balance sheet, T-shape of the financial accounts, also called the balance sheet and profit and loss account. But according to the amendments, now the vertical type of the balance sheet and vertical type of the profit and loss account statements. In this corporate accounting, we call the corporate accounts as the financial statements. The balance sheet is called as assets and liability statements. The Companies Act 1956 in Schedule 4th of the Part 1 Act, they are given a particular format, particular schedules, particular prescribed system to maintain the financial statements of the company. We have to follow strictly the rules as laid down by the financial accounts according to the Companies Act 1956. But Schedule 4th of the Part 1 do not apply any insurance companies, which are engaged in generation of the electricity, supply of the electricity, and some banking companies are not going to follow the Companies Act 1956 amendment of the 2011-13's prescribed format of the accounts. Okay. Here we learn about the preparation of the financial statements under the part 1 of the schedule 4th of the Companies Act 1956. As I said, the balance sheet is called as the statement of assets and liabilities. Profit and loss account is also called as the statement of profit and loss. I said already about you the learning objectives. The reason behind of the corporate accounting is make you the people to become a perfect accountant for the market required companies. The job market wants a perfect accountants who know the rules and formats of the Companies Act 1956. Now the balance sheets and statement of the assets and liabilities and profit and loss, statement of the profit and loss is in vertical form, not in the T shape what we already learned. Here they classified the assets are non-current assets and current assets. And what do you mean by the current asset? You know about the asset which is converted as a cash or a liquid within a short span of time and less than 1 year. That's called as the current asset. The stocks, cash at bank, cash in hand, investments in government securities, investment in various companies, debentures, debtors. These are all called as the current assets. And what are the non-current assets? That is a fixed asset. Earlier we said about the fixed asset. What is fixed assets? Land, building, machinery, plant, which is not easily converted as a cash within a short span of time, called as the current asset, non-current asset. And next we learn about liability side. The liability side. Shareholders fund, equities and liabilities. Shareholders fund, it's equity shares, preference shares, redeemable preference shares, non-redeemable preference shares. The fund which is belongs to the shareholders of the company, and share application money pending allotment, and every shareholder have to pay the application money for share certificates which companies offer him. The pending any allotment, the pending money is any allotment to the share application is called liability also. Non-current liabilities. What is current liability? Which will be payable in a short span of time, not less than 1 year, is called current liability. Non-current liability is long-term loans. Long-term liabilities is called non-current liabilities. Current liabilities is called creditors, bank overdraft and short-term loans and outstanding expenses, outstanding salaries, outstanding rent. These are all called as the current liabilities. And already I said the non-current asset and current assets. Let's come to the point of the multi-choice questions. Here we will discuss. According to the which act companies have to prepare the final accounts? There are 4 options. Companies Act 1856, Companies Act 1956, Companies Act 1946, Companies Act 166. Here the answer is B, Companies Act 1956. The second one, current liabilities are, there are the options: cash and bank, building and plant, shares and debentures. Current liabilities A, B, C. and options are A only, A and B, A and C, all the above. The option is C. The answer is C. A and C. The next one. Current liabilities are bank overdraft, trade creditors, bank loan, salary outstanding. A and C. I mean bank overdraft and bank loan. A and B. I mean bank overdraft and trade creditors. A, B, C, D. Bank overdraft, trade creditor, bank loan and salary outstanding, and all the above. It is A, B, D. The C is the question. Next one. Multiple choice question number. Next. Deferred tax liabilities. Non-current liability. The tax we have to pay, but would postpone the payment of the tax. It's called current liability or non-current liability, long-term liability. It is current liability is the C answer. Next one. Trade payable. Whether it is long-term liability or current liability or current asset or other incomes. What is this? Trade payable. It is current liability. We have to pay the trade payables within short span of the time. Here we discussed about the Companies Act 1956, and thank you very much.